REITs are super opportunistic and are close, watchers of the market. And I think probably 2025 is going to be a very good year for capital markets issuances for REITs.
I'm here today with Jerry Cummins, partner at Sidley Austin. Jerry, how are you today?
Doing great. Thanks, Diane. Thanks for having me.
What are you anticipating in your practice as a result of the upcoming change in administration?
Yeah, so there's a lot of talk out there about that topic. And, I think primarily we're going to see a slower pace of new regulation. We're going to see a reassessment of areas of focus. And I think that initially, certainly, we're going to see an emphasis on deregulation.
And what are you seeing in the way of transactions in your business?
The perspective I come from in the public REIT space, I do a lot of capital markets work, and Sidley does as well. Over the last 1, 3, 5, 10 years, Sidley has been involved in more capital markets transactions for REITs than any other firm. And so, my perspective on this year, 2024 has been a very strong year for capital markets issuances by REITs. We saw a real flood of deals over the summer and into early September. And I would say last year was a good year, but we saw some of the top REITs issuing last year. This year we saw a lot more of the top REITs and the rank and file REITs as spreads came in for those companies. And rates were very good over the summer and into early September. We just saw a real flood of deals. Since that time, rates have moved up a little bit. People got a little bit nervous about the election. And so fourth quarter has been a slower time than what we saw over the summer. On the equity issuance front, we've seen I think all of the REITs that I'm involved with that have active ATM programs, keeping up those programs on a quarterly basis so that they're able to access capital when they need it. I think that outside of the ATM programs, probably the area that was most active for issuing equity, commercial mortgage REITs, where that's kind of a private credit trade, where a lot of investors, I think, were piling in, similar to what we've seen in our practice on the private fund side, where private credit is very hot. We saw that with kind of this non-bank financing coming from commercial mortgage REITs being very active in that space. And then just to kind of peek ahead to 2025, a lot of the pundits are saying 2025 is going to have very good conditions for a high level of transactions, maybe some M&A, portfolio transactions, and financings to support that. We'll have to see. Rates have been cut a couple of times here. Inflation and unemployment numbers recently came out, and the Fed has commented that perhaps the cuts will be a little bit slower.
And are there any types of new transactions or trends that you're seeing in your practice?
Yeah, I guess just a word on what sectors. We're seeing a couple of sectors standing out. Senior housing. 20 years ago, we talked about the macro factors that would lead to a need for more senior housing and people being, over the age of 65 and the population growth there. And that's come home to roost. And we're seeing a lot of that. Matter of fact, in senior housing, that issue is probably more acute than the housing shortage more generally across America. The other thing that we're seeing, particularly in our real estate group, but also in supporting areas like finance and others, tax, are the data centers, ground up developments. That is a boom that's going on. And so we're seeing a lot of those transactions.